Hey guys, good afternoon, good evening. Welcome to another Q&A. Not a regular stream, right? You should be aware of that. Just going to spend some time to answer a few questions regarding my trading, my investment strategy. We have 60 minutes to do that until the next stream begins. I noticed after the last Q&A, many people were interested in my strategy. So I just decided to do another stream for you guys and give you another opportunity. I mean, I'm under fundamentals almost all the time, but I thought it would be a good idea to have another stream as well. Can you hear me? I'm seeing no reaction, so I'm not sure. Yeah, perfect. All right. Okay, first come, first serve. I'm not gonna present anything. We've been discussing the market in the last few days and weeks, right? A lot of stuff we discussed has been playing out pretty good. This is the most important chart you need to monitor, right? We discussed this as well. USDT dominance, watch out for a breakout. Other than that, everything remains unchanged. So if you have a question, just make sure to tag me in the chat, right? So if you have a question, you tag me. If you're just discussing something with another member, don't tag me, obviously, but I'll just skip that, right? Because if I just look at the text, I think I'll have an easier navigation through the chat. Yeah, just type in questions in the chat and I'll go over them. It's literally a Q&A. Oh, Matteo, everything prepared. All right. What do you define as a support resistance zone? How many taps? What time frame? Recent taps more relevant than older ones? Many questions. All right. So support zone is basically, to me, in the most simple terms, an area where price has reacted from historically. It does not really matter if it was a recent tap or it was a tap 3 years ago. It certainly depends on what time frame you look at. Here, for USDT dominance, for example, we're taking into considerations taps that have been happening throughout the cycle, right? So for me, if this breaks out here, the first zone of interest would be this 4.60% area because the price has reacted from it several times throughout the last few months, right? So this is what I personally consider a support and resistance. Now, obviously, just because something is support or just because something is resistance, it does not mean that it will serve as such, right? We have multiple cases where support is lost, where resistance is broken, right? So support and resistance anticipation should always come in confluence with local triggers, right? When we have a resistance zone being reached, we want to check if there are any local triggers that suggest that price is going to reject from that area, right? So that can be bearish divergences, that can be an SFP, whatever you use to do your analysis and to justify new entries on anything, basically. So that is what I consider support and resistance. How many taps? It depends from case to case, right? Usually, for example, here on this trend line retest, we had 3 taps. 3 taps usually. I mean, there's no rule of thumb, right? You cannot say just because this is retesting it for the 4th time it's gonna break. Maybe it could test it for the 5th time and it's gonna break. Again, we always evaluate local triggers to understand if it's gonna break or not. For example, here recently for USDT dominance, we had a daily bullish divergence, right? So this could help you understand that another retest of this zone would not hold and it would just break out. And in addition to that, we also had those 3-day bearish divergences. So it's not really about the number of taps. To me, that's completely irrelevant. I don't know why people pay so much attention to that. It's more about the triggers that the market gives you, right? And those will help you decide whether this retest is going to hold or not, right? If there wasn't any bullish divergences or meaningful bullish divergences on USDT dominance here, or if there weren't any meaningful higher time frame bearish divergences in the market, I would have very limited reasons to believe that this can break out from here, right? But we do have them, and this helps me understand that here, although we had this as a resistance zone, right, there's a high probability that this is going to break out. So I hope that helps. Hey DB, I know this is dubious speculation, but could you see ETH go to 2,800 before the end of the cycle, let's say? That's a question related to the market, right? This is a Q&A stream about my strategy. I think it's possible, but we will discuss that in another stream. Can you describe how you have been scalping in the last 2 months or so? A few real-life examples, perhaps explaining your thinking process on the lower time frame while having the bear dips on higher time frame. Yeah, absolutely. Last few weeks have been painful for every trader, to be honest. Not pleasant at all because we only had very limited moves. Let me think about an example of a trade I took. ETH. Let's just take ETH as an example because this is one of my recent swings that I took before this parabolic move. Right, this was obviously before these higher time frame divergences, right? But here for ETH, what was one of my recent swings is this 30-minute bullish divergence, right? And if you remember, this retest for ETH at 3,400, which was our higher time frame zone of interest, right? It was a scalp zone of interest. It ended up being a swing zone. Came with several retests for USDT dominance in our zone, total 2 in our zone. There were a few other indexes that were in our zone. And on lower time frames, as I said, we always look for confirmation as well, right? Just because something is at our zone doesn't mean that we necessarily can buy. But as everything was dropping quite a lot, and I think ETH even went to like 4-hour oversold, if I'm not mistaken. Yeah, maybe even more. And in the context of that, it was basically printing that, where is it? Printing that 30-minute divergence. So unless we get a proper flush in the market, right, like a huge wick, on slow bleed, I always look for lower time frame divergences. That is my personal trigger to enter any trade, right? So here on the first tab, I don't know if we can replay this. Yeah, we actually can. Perfect. So this is ETH, right? When ETH dropped to this level, I was already aware that it is at a higher time frame zone of interest, right? Besides that, I had USDT dominance in my zone for Confluence and a few other indexes. A lot of them lined up perfectly, right? Now here, once ETH dropped to 3,394, it also reached a 30-minute oversold zone. Now this alone does not tell you to buy, right? Just because it is oversold does not mean that you need to buy, because it can go very deep into oversold and it can stay at oversold for a very, very long time. This could literally be at oversold and the price could just keep on nuking, right? So that alone is not a signal for you to buy. But I am aware at this point that ETH is oversold on the 30 minutes. So from this point on, I will monitor the price action manually. And this is why I don't really like to place a lot of limits, because I always, at least for scalping, maybe not for spot swing, but for scalping, I always need local triggers, right? So I'm aware now that ETH is at my zone of interest, right? And I'll keep monitoring. Now at this stage, by the way, there was a POC, I think a monthly POC around this level. It's not here anymore because POCs update all the time. Now, what that meant is that once some price action developed, right? ETH did the first peak. here. RSI started to grind up. Now, my anticipation after rejecting from these POCs here. Sounds lagging? Can you hear me or not? Sound is fine. All right. Now, usually, I do not place limits without getting the confirmation that this is forming a 30-minute divergence. But since everything was oversold and everything was at my higher time frame zone of interest, and I had this POC here, I anticipated that it could fill this POC, wick down, come above, close to 30-minute below this one here, right? And the RSI would do a higher low and print the 30-minute divergence. Now, of course, that's a bit riskier because price could literally fill this and keep on nuking. And I wait for the 30-minute close, and it doesn't close with a 30-minute divergence because the second peak on the RSI drops below the first peak. And that's just not a 30-minute divergence. And of course, there's the advantage that I could get a fire entry here because I could get filled at 3,358 and the RSI divergence could form at a bit higher, right? So I would then have an entry that is below the divergence, which is super, super safe. And luckily, that was the case. When there are no POCs to play, I usually don't do that. I wait for the candle to close. And once I get this confirmation here, so the 30-minute candle closed below this one, and we had a higher low on the RSI, I would enter market, right? In this case, I got lucky to get filled at this POC, which is not here now, but there was a POC. In the context of the 30-minute divergence being formed, and the invalidation here is basically very easy. Even if you do it manually, if the price just starts accepting below this trend line here, right? And the RSI starts making lower lows, but this could also take quite a lot of time. But if it starts invalidating this 30-minute divergence, that you can, in many cases, evaluate on this trend line. Now, of course, you can say it could also do a 30-minute divergence a bit lower, like this, right? So always, it always needs a bit of manual work, but the invalidation is not super difficult. At the end of the day, you could have also used this POC here for your invalidation, right? Which is not a big stop loss, given that you are at a potential swing zone. So if you did something like this, that's like 1.25%, maybe a bit lower, 1.50%, which is nothing basically. So this is one of my recent trades. I've closed it obviously like maybe a week ago or maybe 10 days ago, but this is one I remember. There were probably a few ones that I took as well, but this is usually my thought process. I let a lot of price action develop unless we get a super big flush. But I think it's very important to let price action develop. Let's just take another example here. And this obviously always comes in confluence with indexes, right? So this is maybe what sets my strategy a bit apart from everyone's else, because I consider total market cap, total 2, total 3, USDT dominance, others, maybe not everything at once, but I have my higher time frame zones of interest. And once I get these alerts, for example, for ETH, for others, we discussed it in yesterday's stream. This is a higher time frame zone of interest. This 276 billion is a lower time frame zone of interest. So once I get this alert, I know it's time to pay attention to local triggers, right? And then I zoom into charts 30-minute, usually nothing more lower time frame than that, and I look for local triggers. But what I wanted to show you as well, damn, I forgot what I wanted to say. There was something I wanted to say, but I forgot. Sorry about that. But I think this should be pretty clear. Maybe I get reminded of that. All right, let's. I hope that's fine, Modoc, or who made that question. Yeah. Can you go over like a morning routine for trading, how to assess for opportunities, etc.? You can merge these with Modoc. Basically, what I just said, right? I'm not sure if that covered it, but if I'm interested in something like ETH, I go from super higher time frame, see where it is trading. I know where the RSI is for a specific asset on any time frame, right? 12 hour, 4 hour. I'm aware if something is going towards 4 hour oversold. I'm aware if something is going towards 30-minute oversold. When something is going toward a 4 hour oversold, and it's a bit easier because I wait for the first peak and the second peak on the divergence maybe can happen the next day, right? So I don't need to be super active on that. When it comes to 30-minute, I know that I need to monitor the price action manually because the divergence can form in like 2 or 3 hours, 4 hours. But this is usually what I look at. Everything I discuss in my corner, all the indexes, also on the macro side of things, I monitor those probably on a daily basis. S&P 500, the dollar, the Nasdaq, all the crypto indexes. Can you explain, please, the POC? I'm kind of new and haven't had a proper explanation so far. How do you find these POCs? It's an indicator, and they've shared it with you. I don't draw them manually. I also use another indicator, but I think Pocky's indicator works pretty good. Tag me, guys, if you have questions. I'm just skipping comments without a tag. In the last example, how do you differentiate between where you entered and previous oversold div? Yeah, that's a very good question, actually, X. And that is where my confluences from indexes come in play, right? A divergence is only relevant for me if it happens at a support zone. Divergences that happen between support and resistance are not super important because the probability of them playing out is significantly lower, right? So for ETH, for example, at 3,400, I knew that this was a higher time frame zone of interest, right? A support zone. And apart from that, we had several indexes at our zones as well. So 3rd of August, for example, total 2, 3rd of August, our zone was 1.33. USDT dominance, 3rd of August, look at this. USDT dominance between 4.60 and 4.50. This was another index that was in our zone, right? So always important to find these higher time frame zones of interest and only then evaluate local triggers, right? I'm not really interested in divergences that can form when there's no support zone for the indexes or a resistance zone for USDT dominance first. And apart from that, what also needs to be considered is that 30-minute divergence is not equal to any other 30-minute divergence, right? What do I mean with that? A 30-minute divergence that happens in the context of a 4-hour oversold RSI is more reliable than a 30-minute divergence that happens without the 1 hour even being oversold. Or a daily divergence, a 30-minute divergence that happens in the context of a daily divergence being oversold is way more reliable than a 30-minute divergence that happens when not even that 1 hour is oversold, right? Because at 1 day oversold, you know that a lot of sellers have sold, right? And the price has dropped a lot. So the 30-minute divergence can actually have a bigger hit rate and also serve as a swing. So that's like two parts of the answer, right? So first I look at the higher time frame RSI. Is it oversold? Does it add confluence to my lower time frame divergence? First, and second, I look at my higher time frame zones for all the indexes and of course for Bitcoin as well, right? So I hope that makes sense. Even though your strategy is a higher time frame strategy, I have the feeling it's very time consuming because there are so many confluences that can influence trades. Could you perhaps elaborate on your spot strategy and how you use invalidations for spot? Absolutely. The reason why I do updates on lower time frame is only because higher time frame takes a lot of time to play out, right? So if I talk about a 3-day bearish divergence on total 2, it can take 2 months to see its full effects, right? And how boring would that be if I would say every day there's a 3-day divergence on total 2, we have to wait for it to play out, right? So in between, there's obviously a lot of opportunities for trading, and I do trade as well. I'm more of a higher time frame trader and investor. But in between, if I see good setups, I like to trade as well. I like to share some setups and fundamentals, not in my corner because my corner is strictly for macro stuff, but on the fundamentals, I do share them. And yes, I mean, this is my system. It can be complex, right? Maybe you can take a few things out, but personally, I'm used to this. I think it has a very good hit rate, so I'll keep up with it. In terms of higher time frame, there's nothing easier than buying spot at higher time frame zones. Absolutely nothing easier. People just overcomplicate it because they pay too much attention to what's happening in between. For higher time frame, we can look at divergences just like we do on lower time frame. Others, for example, in April, 118, 119 was our big zone, right? At April nuke, you had a very convenient 3-day bullish divergence right here, right? Apart from that, in April, you also had a bullish divergence on the 3-day for Bitcoin, on a daily as well here, right? So everything we do lower time frame, you do on higher time frames for spot purchases, right? So you don't look at the 30-minute, you look at more higher time frame stuff, especially if it comes at your macro zones of interest. Now, of course, this is a pretty big move in between on lower time frames, but when you buy spot, realistically speaking, you don't really care to be super precise, right? What will be important in that case is first if your zones of interest hold, right? So that is your part of your invalidation. For example, if you want to buy mid caps at 180 billion for others, and you have a 3-day bullish divergence, those are your two triggers, and your triggers basically show you the invalidations, right? The first invalidation is losing that 180 billion area. I'm not saying about drops to like 178 billion, right? But like a higher time frame lose of an area and an invalidation of that higher time frame bullish divergence. Once this bullish divergence is no longer valid, there's no reason to hold anything that you bought here, for example, right? So I hope that helps, Tim. Can you show what is invalid in RSI? How we know that your entry is invalid? Yeah, I think if you look at ETH in the last run up, there are a lot of RSI and invalidations. It was very difficult to trade this on lower time frames. Let's see if we find something. I mean, look at this. Right? 30-minute after 30-minute, but price barely reacting. So here you could have used, let's say, if you played this for a short, for example, right? As soon as the price started accepting above this trend line here, you would know that this is no longer a 30-minute divergence. This is probably not the best example, but usually you look at price and RSI. So let's just draw something up. Basically, if the price does this, right? and the RSI does this. For me, the best way to see an invalidation is through the RSI, right? If the second peak comes below or drops below the first peak or starts accepting below this one here, the div is invalidated for me. Or a new div can form, it depends. You can still look at this, right? And especially if the RSI starts dropping below the first peak, that's an invalidation for me. Or you can also look at the price and what it does, right? If it basically starts dropping below this, finding acceptance, especially if this is formed at a POC level, that will help you a lot. Because if it loses those POCs and drops below the trend line, you know that the divergence is invalidated, and basically the reason for taking that trade is invalidated as well. So no longer need to take it. You mentioned that you take TP at bearish divergences on support resistance. Is that the same time frame as you took the trade or any? No, it doesn't matter. Doesn't matter, because if the market is super bearish, for example, if you take something on a, let's say, 30-minute bullish divergence, it can literally top at a 5-minute bearish divergence. So it always depends from context. But just because you took something on a, let's say, 4-hour bullish divergence does not mean that you sell or you take profits at a 4-hour bearish divergence, right? Because RSI is not guaranteed to fully reset on the same time frame. That is the ideal case, of course, but it's not always the case. There have been many instances where I bought something after a 4-hour bullish divergence and I literally sold on a 30-minute bearish divergence. And that was the local top. So always depends a bit on other confluences. We don't just look at divergences, right? We also look at support and resistance. We look at POC clusters. We can look at something like monthly open, yearly open that can serve as resistance, right? And that does not allow the RSI to fully reset. So always good to have a few confluences that will help you understand when to buy and when to sell. But I mostly use POCs, RSI, divergences, daily open, monthly open, yearly open, OBV at some cases. If you have a divergence on RSI, but also on OBV, that just adds confluence to your divergence, because you know that, for example, if you have a bearish divergence, you also know that volume is confirming that lose of momentum, right? With volume dropping. And if you look at the wood spot, for example, it often gives you divergences on RSI or RSI and OBV. And RSI and OBV has always more confluence than just an RSI divergence. When you use liquidation levels, order blocks, you use liquidation levels, order blocks, PVG. What your opinion, and use other indicators? I just use the ones I mentioned. I don't. I mean, order blocks. I don't necessarily look at that. Support, resistance, RSI, divergences, and POCs. Can you show that on not the good example how you would manage if you enter short? It's easy in theory to cut when we break below or on trend. How would you operate on that bad ETH example, which is theoretically a valid setup? I mean, first of all, I wasn't. I did try a short on ETH on this move up, but I personally got stopped break even after it dropped a bit, so I just stopped trying to short it because it was too much FOMO, right? And one thing that we need to understand is that in parabolic moves, lower time frame divergences are not that reliable, right? So it needs some form of fundamental understanding of where the market is right now, which will help you or inform you whether your indicators or triggers will work out or not, right? So with that fundamental understanding and also understanding that on higher time frames, ETH had broken out of a very, very big resistance zone, which was this 4K area. I wasn't very inclined to take a short because I understood that it is very likely that 2021 highs can get tagged after this reclaim, right? So that's a higher time frame understanding, a fundamental understanding that shows me that lower time frame divergences on this move up on ETH may not work, right? And that's why I stay away from it, right? So it just because there's a trigger that comes from TA doesn't mean that you necessarily need to take that, right? Because you need the broader understanding on where the market is right now. But if you were to take a short and try it out, let's see if we can get a good example. I mean, there's so many examples where divs got invalidated. You can see it from the bot as well. I think this is a good one here. This is probably a good one, right? Because this is a clear 30-minute div, maybe a bit too wide, but still a div. So if you entered here, which was a resistance zone, right? Let's say you ignored higher time frame understanding and fundamental understanding, and you just focused on technical analysis, and you entered an ETH short here, and it dropped a bit, right? I think so. First of all, you would probably need POC confluence. I don't know if there was any POC at that time. Maybe it could have helped. If there was a POC at that time, I think it would have helped a lot. But if there wasn't, and you took this trade here, let's see how it would invalidate for me. Because this is a bit of a tricky one because RSI does not really give you a higher high. This is a 3 drive. Okay, so maybe what you could have done here is take this 3 drive, although it is a bit too wide, right? First peak, second peak, third peak, and you deceate here and here. Then what would basically be the case here is that the RSI on the 30-minute reached the 50 area, right? And reaching the 50 area is very important because it shows you that the RSI divergence is partially reset, and you at least need to put your stops break even, right? Now, if you only entered here, then your stops would probably be at 3,951, right? And the worst case, you just get taken out break even and you don't incur any loss. And then your red on the RSI being a reset here is good, but this is not a typical example, right? Very difficult to use this. I don't remember any other lower time frame divergence that did get invalidated, and this is probably not the best one. But in this case, I would have used this RSI partial reset to move my stops break even, and then I would be risk free on this 3 drive. And in this case, if I took the short, then I would be safe because I would not get stopped out. But if there are POC levels, it makes it a lot easier. Say here will some POC levels that you played, right? Then you can put a hard stop, let's say 1.5%, 2% above these POCs. That makes it a lot easier. But I'll try to find a better example. This is not really a good example. I remember you saying to play levels from oversold to overbought and vice versa. So scalp from 30-minute oversold to 30-minute overbought. However, I came across some situation where the 30-minute or the other time frames doesn't reach overbought and starts dropping to oversold after reaching 60, 65 on the other side. How do you deal with that I have round trips profits like that. Yeah, you always need to check all time frames, right? As I said, you can long something on a 30-minute divergence, and then it just rejects on a 50-minute divergence. I think I got a good example on this. I did catch SPX on a recent nuke. I had a stink bid on it. And what then basically happened is, where was it? Where was it? I think it was here. Yeah. Was it this one? Could have been this one. Yeah. So I basically caught it here. It was a monthly POC. It bounced and it formed a 15-minute bearish divergence here. Right? And based on that 15-minute divergence, no, it was here actually. I'm sorry. Here. It formed a 15-minute divergence here. And while this happened, I had confluence from others retesting that. You remember that zone that we discussed here? I covered this in my corner today as well, which was resistance. So I had confluence from that 15-minute divergence and the others index doing a bearish retest here. And with that 15-minute divergence, I decided to take some profits on SPX. So what I'm trying to say is always consider all time frames, right? Even if you long on a 15-minute divergence, start looking from the 5-minute time frame, 15-minute time frame, and 30-minute time frame, of course, and look for local triggers that may lead to a rejection of the price. I think that makes most sense. You use higher time frame POCs. Do you look at the ranges that formed them and take that into account? Yeah, I do look at the support and resistance, of course. For example, SUI has been on my radar for quite a while at 2.90. Where's SUI? 2.90. I have a stink bit there. Right, and this is not my updated chart, but I have some form of support here for SUI. Right, just regular support where the price reacted from before, and then I have POC confluence, right? And sometimes, yeah, I do take into account some form of patterns that may have formed as well. So it's obviously not just POCs, but just regular support and resistance as well. RSI considered as reset once cross 50 level. There's no rule of thumb for that, but I would say the way I consider it is the following. Let me show you ETH as an example for that. Whoa, it's nuking. We did have a daily bear div on ETH right here, right? We discussed this 4K area resistance zone daily bear div, right? And we set no more entries here. And in this case, the daily RSI reset at the 50 area. So I always take the 50 area as the first potential zone for a reset. Ideally, we go from daily bear div to daily bull div. There are many examples of that as well, but it's not guaranteed to happen, especially not in parabolic markets, right? So what I usually do is after I see this divergence, I place a limit above 50 on the RSI on the same time frame. And when that hits, I look for local triggers and see if it is at the support zone, if my indexes are my zones of interest as well, right? And if I have local triggers, I'm gonna assume that this daily bear div is gonna reset at the 50 area in this point, and that was actually the case because we got the last push on ETH exactly from this zone. So it depends a bit on the context. Can you show us examples on how you take TPs and how much percentage? Usually I close my positions fully, to be honest. If I enter a 30-minute bullish divergence and I see a bearish divergence forming, in most cases I take my profits fully. In some cases I do leave a moonback, maybe 20-30% of that position, but usually I close fully because if I see a bearish divergence, there's no reason for me to hold anything. Okay, is there any question that I skipped maybe? Anything that's unclear that I can cover again? The backbone of my strategy is my indexes. My strategy wouldn't exist without this. And that's because these indexes, they're so clean to trade. Like USDT dominance is a cheat sheet. I'm just very surprised so few people actually take something like this into consideration. I think this is like super great. It respects all macro levels so good. How about how you manage losing trades which you are controlling manually, low time frame? What about it? How about managing? USDT dominance, yeah, then the total charts. The VVX to others is just something that shows me where the market is right now in terms of taking risks. Right, as I said, red boxes for taking profits, green boxes for adding exposure, but that's more on higher time frames. When you decide when to cut or when to hold and see if it plays out. Yeah, I think that ETH example was the best I gave a bit earlier. When the divergence is invalidated, there's no reason for me to hold. I think there was some diffs today, right? I'm not sure if they held or not. Let's just check. Yeah, look at this. This is good. So we had a 4-hour bear div on USDT dominance, right? At a lower time frame resistance zone right here. Look how it invalidated this divergence. This is no longer a divergence for me. Can you say this is a divergence? Maybe you can, but this came right after the invalidation. Let's see what the bot says. No divergence. See? So if I bought something here, I mean, I would have placed stops break even when we dropped here, right? But let's say you didn't, and you monitor this manually. After this 4-hour close here, you basically cut your buys, right? Because the trigger for your buys is gone. This is no longer a bearish divergence for me. And in addition to that, what did I say? I have a fundamental understanding of where we stand with this index on higher time frames. I said that if we don't reject here, it's very bad because we could be breaking out of this diagonal downtrend, right? So Higher time frame understanding on where we stand in the market, and then lower time frame triggers help me navigate my positions only using this index in this case. And I'm pretty sure, I haven't checked, but with this invalidation for USDT dominance, there were probably invalidations for some divergences on assets as well. Let's see. Look at this. What is RSI doing? This is probably not a div, right? Bot says it is. But to me, personally, this is why I don't use the bot that much, because it reads divergences a bit differently. So if I bought here, I would have had stops at break even, first of all. So I would just get stop break even. Then I would have waited for this 2-hour close here, right, to see if we get a 3 drive. We did not. So for me, this is no longer a divergence that I'm considering, because it is flipping below this trend line. And now you can basically see Ethereum dropping as well. And now you could say, let's wait for this 2-hour candle to close and see where the RSI closes, right? If it closes above this or not. But for me, that's too risky. I'm not taking this risk. And this is why you wait for 2-hour candles to close. And this is a divergence getting invalidated. But you will have confluence for this after the 2-hour closes, because this RSI will probably be below this area here. What do you think about BTC one-day charts from June 2017, September, and what? To me, they look identical, repeating. That's market-related questions. We're doing strategy here, so better to join my stream on Thursday and ask that question, and we can look at it together. So in this case of USDT dominance and your position is in loss, do you cut immediately after the 4-hour close or wait till the market bounces? No, I would actually cut. When I get this, where is it? When I get this close here, this candle close here, right? The 4-hour closes, I'm in a loss, but there's a risk of this breaking out now. And I don't want to be in positions that I took here when I have this divergence getting invalidated after this 4-hour close. You remember, Modak, when I told you to wait for the 4-hour close in fundamentals? This is why that is important. Because it can literally just wick up here, and then the 4-hour can come here, and this would still be a divergence. Hope that's clear. Now for Bitcoin, for example, we have a 3-day bearish divergence, right? It's been ignored by quite a lot. Not gonna lie, that's never good. Never ignore higher time frame divergences. So when it comes to spot buys for BTC, for example, I would want to see a higher time frame bullish divergence. Now that can be on the daily. I set an alert for daily RSI, and then I look at something like this, just as it happened here, right? Literally a daily bullish divergence. But this is the main reason why I'm not really interested, or I wasn't interested in swing positions, this 3-day div here. And look at all the liquidity taken on this last move up. Pretty wild. All right, we got like 10 more minutes before the next stream. I'll do more of this if that helps. We can do one every 2 weeks, no problem. So just let me know if there's anything else. I think there's quite a difference between higher time frame investments and lower time frame trading, right? When it comes to higher time frame investments, it's far less complex. You just look at all of these indexes on higher time frames, identify these support zones, and basically buy whenever those zones are reached, right? And in that case, you may not even complicate it that much. Whereas on lower time frames, of course, you need to be aware and monitor everything manually. Four-hour div BTC. In real time, let's say BTC is approaching a POC at 113 while forming div on the 50-minute. If USDT on the 4-hour broke out, how would you choose the trade? I would be aware that USDT dominance is breaking out, right? So that would, if I would take that 15-minute divergence on Bitcoin, I would keep it very tight, because I would understand that after such a breakout, the market can drop quite a lot. Just like for ETH, right? When I said it flipped that 4K zone, which basically tells me that a violent move can come up. So I should not necessarily be taking trades based on lower time frame triggers, because they can get invalidated, right? So here as well, if I'm aware that this can break out and I see a 15-minute divergence for BTC, I know that there's a pretty big chance of it getting invalidated until this reaches a resistance zone. And only at that resistance zone I would take that divergence into consideration. All right, all right. What else? What else? What else? And of course, I make a lot of use of dominance indexes, right? We were able to luckily identify this 3-day divergence on Bitcoin dominance early on, which hasn't even had a market structure break, and just played out very little. And look at the consequences, right? When I see a 3-day bullish divergence on Bitcoin dominance, and I see a 3-day bearish divergence on BTC, I start assuming that if that 3-day divergence on Bitcoin starts playing out, this will accelerate in growth, because people will move out of Ethereum and altcoins and into Bitcoin, or Bitcoin will gain more relative market share compared to altcoins and ETH, because they will be sold more, right? So always important to understand these dominance indexes as well, because they will help you predict where money will be going to, or what can or will show relative strength in the market in the near future. You know your trend line on USDT dominance. You did online chart. We haven't broken it. If it peaks, does this make a difference? We haven't yet broken out of USDT dominance. Why do I say that? Because peaks are not so important for me. I want to see how candles close because I'm doing this trend line based on candle closes, right? So the 12-hour candle closes in what, like 8 hours, something like that, right? So I want to see how this closes, and if it closes like this, then I have bigger confluence that this is breaking out. If it doesn't close like this, right, then we could just have something like this, and this is not really a breakout. We could end up with a wick here as well and then just close below. So that is why I wait for the candle close to understand whether this is breaking out or not. Got you, T. All right, 3 more minutes, maybe one more question. And then we have to wrap it up because there's a stream right after this. Can you do a quick live analysis on the current others chart and the RSI? For example, the 12-hour lost the 50 area. Yeah, absolutely. Let's see. So first of all, we did say that on the others index. Let's get rid of this. This. We did say that the others index flipped a pretty big resistance zone the other day. Right here, right? Because we got a rejection, we flipped above, and ideally, if the market remained bullish, we would have held this and went higher, but we got the flush on Friday and we found acceptance below. Then we got a first push rejected, we got a second push rejected, right? 2 rejections make me skeptical on a further move up. Now, to identify good buy zones, we can use several confluences, right? You can use fibs, pull fibs, and see where the golden pocket is. For me, this is this area at 275 billion. You can see that from the 0.75 level, 0.72 level, which I mostly use. In addition to that, you have POC confluence at 275 billion, right? So you have 2 confluences. And then, of course, you will evaluate local triggers as well if you see a div or not. Maybe on the 30-minute. I'm not sure if you get higher time frame RSI resets here, so I doubt that you'll get some form of 4-hour div, but always good to look at that as well. For instance, if it was the case that the 4-hour peaks like this and does something like this, then apart from the confluence you have from fibs and POCs, you also have RSI divergence confluence, right? But this is just a scalp zone for me because on higher time frames, as I said it before, there's this parallel channel that has formed on something like others, which is basically something like this and this here, right? It's still a huge bear flag, to be honest. So that's something to consider. Don't forget about this. We don't mention it every day, but if USD dominance breaks out, this would be my first zone of interest because this is historical support, right? Look at all the rejections here, 250 to 240. We also have POC confluence, and it would be the range lows of this trend line. But if you find acceptance below this, there's no reason for me to hold on to anything because that would mean way more blood for altcoins. So that's how I would approach the others index. But I need to wrap it up now because I do have a stream after this, and I don't want to take anyone's time away. But I'll do this again, and if you want, of course. And I will be on the fundamentals all the time, and we can discuss a lot of stuff related to the strategy, both on higher time frame and lower time frame. So just tag me there if you have anything. If there's interest, I'll have another Q&A, maybe at a time where we have more time, more than 1 hour, so that we can cover everything thoroughly. But I think we did manage to cover a lot, both on higher time frames and lower time frames. So I hope this was helpful, guys. So enjoy the rest of your day. Stay safe trading. Remember that Bitcoin dominance is quite bullish, so don't have too many limit orders on perps, right? A few are doable, but if you get some form of flush, you don't want to lose a lot of money. So just take care of that. All right, I'll wrap it up and I'll see you guys on the fundamentals. Thank you for joining and for engaging. I appreciate all the questions. Hope this was helpful and take care, everyone. Have a nice day.